Well, happy Monday, everyone. It's Shooter. Hey, welcome to Monday's box scores. Hey, this is like a makeup session. Of course, at the end of the presentation, please review our disclosures. We will cover primary wave. Now, I think this is a complicated week because, granted, we've had one heck of a rally going into the weekend. There was a lot of money off the table. Breadth was extreme going into last week, but yet we opened this week and our breadth is negative. So, that's where it becomes challenging. I don't think any of the events have been resolved. I think there are more events on the horizon, aka whatever's going on in the banking sector. They were weak this morning. Oil's also weak. It almost implies that the Israel war is over with, but that's a little misleading because of how slow a lot of the markets have been globally. But let's jump right into what's on our position trade list in the primary waves. So IIPR is still there. We got a decent pop, but not a fantastic pop last week. I would have liked to have gotten above the breakout line and held above, but we didn't get that far. But I'll take what we got. Still looking for that intermediate wave one around 127. NTR, inside week, even with the push last week. That's sort of concerning a little bit, considering how far we are down to the base. But we did get a new primary wave trigger, which came in right down there around 53.65. So maybe some cash secured puts here if you don't have something on. Give yourself a little room, maybe down to $50. That's how I would look at that. Intel, what a recovery. Relative strength. Anytime we get a drawdown, they're buying the dips. And, Intel, Meta, as an example, Intel will never have the euphoria that Meta will. I'll give you an example. But this is a decent uptrend here, in a bear trend. Now, whether or not we actually get up and out of here will still yet to be seen, but the count suggests that we do. However, our ABC here, our B and our C, it suggests that we come back down to about 31. So about $7 lower than we are right now. That count will probably change or flip to the upside the next week or two because it was this flat that caused the AI to recognize that, or the pattern recognition software. So there's a possibility it just morphs to the upside. So just keep that in mind. Looking at Square, this thing's noisy. Just noisy. We have 4 different primary wave setups or counts that we've received. These, never filled it. We did fill this one, but after it had already basically turned and gone the other direction. We were shallow, and then we never got down to our other primary at 13, and we just got a new one at 38. So I don't like anything when it's that noisy. It always reminds me of this, and I'm still thinking of this is A, this is B, and this is C, but C equality is still down here at $20, and if it extends, it's way the heck down at probably $10, and then if it extends further, it's a $5 stock. I don't ever like that when I get that visual from looking at something. However, right now there's no technical reason for me to believe that. We overshot a little on RSI. Below the 8-day, I'd get a little concerned again. So maybe that's your stock. Okay, Google's back on deck here. We're not quite to 50% back, but pretty close when I ran this, heading maybe to about 157. We closed below this 382 fib extension. I'd be trimming my longs if we get back there, but a good recovery at this point. Apple, good recovery as well. Nice look. Coming right off of the 50-day. I can't ask for more than that. I've moved trend support down there, looking for maybe 213. If you don't have a position on, good spot to sell some covered calls, maybe around 160, cash secured puts around 160. Let me repeat that. Cash secured puts around 160. Shop now has come back on the list as well. So if you have any covered calls, I'd pull out of it. Matter of fact, most of the covered calls, except for the few names that I'm going to go through with specifics, I would be exiting those and buying cash secured puts, or buying common shares, or even buying a limited number of calls, just a little bit outside the money and towards January, because we could. And, historically, the end of the year, we have a run into the holiday season. So that is pretty much my thought. Look at KKR, now back at the breakout line at 61. Nice recovery, too. So, we're looking for 77 here. So either sell some maybe 55 puts, or, buy right at our 8-day $65 calls. In January, be a little conservative if you're going to jump on board that, and then add as it continues to work. Now, Disney printed a new primary wave setup. We got a 90-minute trigger here at 90, so start off with a quarter position, plan to scale, as we step up. First target is around 91. Not a very aggressive count. for me. We're still squeezing on the Bollinger Bands, which reason I left it on the chart, even though it sort of makes it noisy. I wanted to give a visual here. This is the RSI structure I see. So this is sort of a break of that structure. So something is going on right here, but still we have a count. And, if you follow the counts, you take every primary wave setup, in a bad market, you're going to be right 50% of the time. In a good market, you're going to be right more than 75%. So it just depends on how the market's trending. So if we catch it going into a trend, we do really well like we did in the last rally. We caught a lot of names to the upside. So I don't know that we're there, but Disney, it's worth putting a piece on, that's for sure. Now, oil came off a little bit this morning. I'm looking at any oil play right now as a hedge against the Israel war escalating. That's just my view, because we should be much lower in oil with the global numbers that are coming out, especially with China's consumption. So the only thing that can be there is risk premium. So we'll have to see how that plays out. But according to this, target one is up around 73 with Oxy with a back test of 89. And I believe that we have Amazon now stocks to sell. Now, the reason we have a sell on Amazon, even though it's done really well, nice push here, but we have a wave 2 here, 1, 2, 3, 4. It's a 5-way. It's a diagonal to the downside. So either sell some covered calls, again up around 142. Some of you may still have the 150 covered calls. I think they're safe. If you want to roll into something a little different, that's fine as well. And of course, it's your book anyways. You make that call. Then we're looking for a target, maybe a down around 117 on Amazon. Now, I don't think the consumer is going to bring us a fantastic holiday season. That's one of the reasons. The count sort of supports my thesis on that. Retail's been a little rough outside of just a few names, but that's just my thought. Microsoft. Now, if you have covered calls, I definitely look at trimming them back around 344. Should be all right to about 357. Hopefully you didn't sell 357s and you're up around 365 or 370, but that, I don't know what you took. And because we've entered a new impulse wave long. So once we get this back test off of this rally, then we should keep going, I would think, to the upside, barring additional market weakness, because my bias still is not just going to go away there. All right. So looking at BRKB, didn't quite get to our take partials, and then the end of the week we just went boom. So if you have covered calls, I would trim them on any back test to the downside. I probably would trim them now, because that just looks too euphoric for me. And BRKB tends to be one that comes back pretty aggressively when it starts moving. When you have these rallies, so when we do get a back test, even if you do partials, that's would be my thought. Sell some cash secured puts maybe, or maybe even I don't know. I don't want to push too many calls here. The reason is I don't actually classify BRKB as a tech stock, okay? And it's got a lot of moats, but it also has a lot of moats that have interest rates exposure. So I would rather have a larger position in our tech stocks that are running than in BRKB. Right? That's just my thought. Full position size, maybe. Half a position side, I think, is a decent entry. I'd rather have a little more in maybe Shop, Square, TDOC on the bottom side, on the micros that have hit the bottom, because once they get moving and they do move to the upside, your gains are going to be substantially more. So I would be a little conservative with this action here in BRKB, because to me, it doesn't look done. Even if this is a wedge, this is too shallow. We should be down towards trend support, just with the extent here where we are. So I'm looking at this low as like this low, and then we get one more lower low is my thought. So I think we come back off, but that's just, it's sort of a mixed bag for me on that. But looking at PLTR. Now, the count doesn't support, none of my technicals support this to the upside. If you have covered calls, we had a decent move here. What I probably would do is just buy some cash secured puts. And if my calls do get taken out, you sold 25s, maybe. If you sold 20s, there's a small chance they get taken from you. But unfortunately, when you have something that's choppy and emotional, we do have flow here, and we do have a lot of the commercials and fund interest in PLTR. So, it definitely has the mechanics to break out here, but I have no technical reason to support it. So that's just my thought. Now, Vicky, we've got a very negative count here. So on this back test to about 29.08, I would either sell some covered calls, trim, or buy some puts. That would be my thought. I wouldn't do aggressive with the puts until we get the breakdown. Breakdown line's down here right at the 50% back. So it's got to break below there. That would be where I would definitely add some puts. All right, well, that's what we have for this week, folks. Great trading. Until next time.